Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Friday, January 21st, 2022, about 8:54 p.m. Mountain Time Zone, and this is the weekend update for the previous week. So boy, what a week we had. My gosh, I mean, we saw some volatility and selling in this market that we haven't seen in a couple years. It's been volatile to say the least. And I hope everyone out there is staying safe. I hope you're position sizing correctly. I hope you are adhering to your stops. It's been a vicious market. I know a lot of people have been hurt this week. And so what we're going to do in this podcast, like I just mentioned, we're going to go over what happened in the previous week. We're going to talk a little bit about trader psychology. We're going to read a good trading poem from Frank, and then we are going to go down through my watch list and look at all the stocks in the watch list and look for some potential trades for next week. Just want to start out and mention to everyone that I do take my trades at the end of the day. I am primarily an end of day trader, and I like to take my trades right at the close, right before the close. And the reason I say this is because during the day, you have the algorithms, you have the day traders. They are the ones that are in control of the price. At the end of the day, the large financial institutions come in, they take control away from the day traders and the algorithms. I consider them to be the smartest money on the street. They're dealing with the most money. They have very smart people, best information, best technology, and they take control away from the day traders and the algorithms at the end of the day. And therefore, I want to follow what they are doing. The closing levels at the end of the day are the most valid prices in my opinion, and therefore those are the prices that I make my buying and selling decisions from. All right, so now I did not have any swing trades this week whatsoever. I do have some weekly and some monthly trades that I am going to share with you. But the market was down so much this week that there just were not any signals, which, as it turns out, was a really good thing because no matter what anyone took to the long side, it would have been a losing trade. So I'm grateful for that. And like I said, there's going to be a lot of potential new entries for next week. And when we go through my watch list, we'll take a look and we'll see what those levels are. So let's start off with some weekly trades. I have some weekly trades that I took, and let me show you back here. And here we go. This has been a really good trade on Merck, and again, I trade all sorts of different time frames. It's one of the keys to my trading success. I trade monthly charts, I trade weekly charts, I trade daily charts, I trade intraday charts. I like to get as many different time frames as possible. It helps even out with the equity curve. I also like to trade as many different type of stocks as possible: technology, healthcare, autos, industrials. And I also like to get outside of just regular equities. Gold, bonds, silver, VIX was something this week that really went up. But I like to get as many different types of industries and trade as many different types of industries that are not correlated. And then I like to trade as many different strategies as possible as well. So as many different time frames, many different types of stocks, and even outside of equities like gold, bond, silver. And then I like to trade as many different types of strategies as possible. So normally this is the time of the weekend podcast where I would review my daily swing trades, but there just were no swing trades at all that I took this week. And again, I'm grateful for that. So let's take a look at Merck. All right, Merck. I had a nice deep dip by here on Merck. It was just about perfect with the rejection of the 200-day moving average. This is one of the strategies that I use, the deep dip buy stock trading strategy, where I get some kind of close under, close back over, or rejection of the 200-day moving average. So here on Merck, back on 1210, I've had this position for a while. I did take this with this intraday rejection of the 200-day moving average. Now, did I know it was going to go up? No, I didn't know it was going to go up, but I saw that it rejected the 200-day moving average. I saw that the market tested these levels underneath, didn't like, closed back above. That was my signal to get into the trade. In the coming bars, had we closed below, I would have gotten out of the trade. And you can see right here, I have two lines down here. This is my emergency stop. This is 2 ATR values below my entry point. That is where I place my emergency stop. And a key important point here with the 2 ATR is in your position size. So a good rule of thumb, 1% of your capital, let's say you have $100,000. 1% of $100,000 is $1,000. That's my maximum allowed loss. No matter what happens, I'm going to get out if I lose $1,000. So how do I position size? Well, I take my $1,000 and I divide it by the value of the 2 ATR. The value of the 2 ATR here, 966. Actually, let me do this. It's changed now. When I have to use the value of when I was taking the trade. So 1%. Now I'm using a $1,000 hypothetical $100,000 account. If you had a $50,000 account, 1% would be 500. If you had 25,000, 1% would be 200, or 25,000 would be $250. So just hypothetically here, I'm using hypothetical account $100,000. $100,000 times 1% is 1,000. Divided by the value at the time of the trade, divided by 8.88, would tell me to buy 112.6 shares. I would round that up to 113. So I just wanted to mention that as far as how I position size. So that's how I position size. I take the my maximum allowed loss. I divide it by the value of the 2 ATR at the time that I took the trade. This is my emergency stop. Worst case scenario, had this gone down, got down here using that formula that I just explained to you, you would lose the $1,000. Now, I wait till the end of the bar, whether it's a 5-minute, weekly, daily, monthly, to make my end of day stop decisions. But emergency stop, I would take whenever it happens. You have to come up with an amount that if you hit that loss amount, you get out. You don't wait around. It could come back. Yes, it could, but it's very, very important. So that's my emergency stop. My end of day stop would just be a close below the 200-day moving average. And 95% of the time, your end of day stop is going to kick in. 5% of the time, you are going to hit your emergency stop. But fortunately, none of that happened on Merck. I bought that again with rejection of the 200-day moving average. It moved up nicely. Now here, this line here, the $79 line, is 1.5 ATRs above my entry. That's when I go into trailing stop mode. And 1, 2, 3, 4. So a month later, it did get to my trailing stop level, 79. As soon as it gets there, I go into trailing stop mode, which means now if I have a close below the previous day's low, I would get out of half of my position. And you can see last week's bar, the low was 79.67. We closed at 79.97. So we tested the low, but we rallied back above. So I'm staying in this trade. Next week, if we get a close below the previous day's low, I would go ahead and get out there. Now you might be asking, what are you going to do with your other half of position? Well, other half of position, if it comes down and closes below the 200-day moving average, I would get out there. Or if it rallies up to the 70 RSI, rejects the 70 RSI, then I would get out of another half of what I have remaining. And then after it rejects the 70 RSI, if I have a close below the previous day's low after that, that's when I would get out of my entire position. I have a course on Udemy. It's in the link. It's in the description. The link is in the description of this video. It's a very affordable course. I'll mention it again at the end, but I'm just kind of going over the trades here, but the meat and potatoes and the nuts and bolts of the trading strategy you can find on that Udemy course. It's very, very affordable. It's a great course. I highly recommend it. So anyway, okay. Rejection of the 200-day moving average, up to the 1.5 ATR trailing stop level. I'm in ATR trailing stop level here. Did not close below the previous day's low. Nothing I have to do, although my charts here do show that there are earnings on the 3rd of February. So I never hold stocks positions through earnings. It's one of the best ways to lose a lot of money very, very quickly. So I just don't do it. I consider it gambling. I will exit this position regardless of what it's doing, unless it closes below my end of day stop or end of bar stop here before the 3rd of February. So this particular trade right now, entry to exit up 9.94%, which very grateful for that. It's been a nice trade, but again, I will be getting out before earnings on the 3rd of February. So that's the weekly trade. That one's doing great. Now, monthly trades, here we go. Same signal, rejection. These are monthly bars on Exxon, XOM. I bought this back here on January, February, March, April, May, June, July, August 31st. So the end of August, I bought this. It was the last day of the month with a rejection of the 200-day moving average. Moved up nicely, got to trailing stop level. Here we go up here, and did not close below the previous day's low. So this one has been a great trade. Here, again, it's my emergency stop. My end of day stop would be where? That's right, a close below the 200-day or 200-month moving average. So I always have an emergency stop. I had an end-of-day stop. Luckily, none of those triggered. It did get up to my 1.5 ATRs, which is the value of 1.5 ATR above my entry. And it's going great. By the way, it's at 66.05 RSI. If I ever get above 65 RSI, then my new trailing stop level for the entire position is a close below the 5 EMA. So this particular trade's been a great trade, up 24.22%. Now, here's the little E over here. That's showing earnings on the 1st of February. Again, I don't hold through earnings, so I will exit this before the 1st of February. So the Merck trade doing really well on the weekly, Exxon trade doing really well on the monthly, and then the last trade on the monthly, here we go, Treasury bonds. So I bought Treasury bonds here at the end of October with this higher low V1 in the value zone. This is one of the approaches that I use. Again, here's my emergency stop, 2 ATRs below my entry, my end of day stop. This is a little bit different signal here. Sorry, no, I took that with the 520 crossover. I'm sorry, I took that with the 520 crossover. So now I'm waiting for the end of the bar on the monthly, and the 5 EMA is 146.63 to 147.09. My end of month stop would be a close below that. Right now it is below that, but it's not the end of the month. So at the end of the month, I will have to get out of this trade if the 5 EMA is still closing below the 20 EMA. So this particular trade is down. It's down 2.97%. So that's how I'm going to play that. And it looks like very likely that I will get out of TLT at the end of the month because of the 5 closing over the 20. But I think that shows you some good examples of not all the trades that you take are going to be winning trades, but you can see the winning trades were much higher than this losing trade. And that's the key to profitable trading, everyone, is you're going to have losing trades all the time, but you just have to keep those losing trades small, and you have to have an approach. You have to have a protocol in place so that you can let your winners run. And that's what I was talking about before with hitting trailing stop levels, giving them room to breathe, being patient with your winners, but being very impatient and getting out quickly if you're wrong. And that's the key to long-term profitable trading, letting your winners run, getting out quickly when you're wrong with a loss. All right, so that's all I've got to show you there. The Merck trade on the week, doing very well. Exxon trade on the month, doing very well. And then the TLT on the month, not doing so hot tamale, but a small loss nonetheless. I did have actually quite a few day trades today. And since I don't have any daily swing trades to share with you, I will share, I think, a good example of a good day trade that I took today on Microsoft. And I think this trade will help explain quite a few things as far as how I approach trading. I like to take profits on the way up. I like to take partial profits on the way up. I have set rules for me to get out of like half of my position, but I always play offense and defense. Offense, when things move up, I take a portion off. When there's a red flag and I have some kind of rejection of the 50 RSI or a close below the previous day's low, something like that, then I play defense and take a portion off. So when things are going my way, I take a little off. When things are not going my way, I take a little off. So this is a good example here on Microsoft. What we had here is a V2. Here is bar 1. Here is bar 2. Here is bar 3. Bar 2 washes out the low of bar 1. Bar 3 closes above the close of bar 1. We also tested this low here. So this is called a false breakout to the downside because this price went below this price and then rallied back up. That's the false breakout. And then here is the pattern for the V2. So false breakout to the downside with the V2. Bought this here on the 5-minute this morning at 299.10. It took off like a rocket ship. And again, whenever I have a big bar up, I'm going to take some off. So here at the end of this bar, I took half profit or portions of profits here at 103.50. Now we did move 1.5 ATR from my entry. So when we have a close below the previous day's low, I'm also going to take some off. This is the way I day trade is a little bit different than the rules for swing trading. For swing trading, I have profit targets that I just put in the system, limit orders that, you know, if they hit, they hit. But with day trading, it's a little bit different. So don't get confused between day trading and swing trading. This is a day trade. So entered with the false breakout to the downside, V2, 299.10, took a portion off here because it was a big bar at 31.05. Then we had a close below the previous day's low. That is a warning sign, red flag. So I took another portion off here, but not the entire trade. Oh, and by the way, in addition to the false breakout to the downside in the V2, it was also an under 30 over 30, which actually was one of the main triggers. So my end of day stop or end of bar stop would have been a close below the 30 RSI. So under 30 over 30, false breakout to the downside, V2, lots of confluences of signals, 299.10, moved up. Took half here just because it was a big strong up bar, got to 1.5 ATR trailing stop level, took another portion off here with a close below the previous day's low, still profitable, 306 cents. Here on this bar, we went above the 50 RSI and then closed below. That's another warning sign. So I took another portion off here at 103.13. Then we just had another big up bar, took another portion off here at 302.39, and then the remaining amount of this trade I got out of was when we rejected the 50 SMA here at 303.53. So it was a really good trade. Got in at 299.10, got out at 306 cents, got out at 301.50, got out at 302.39, and got out at 303.53. So just an example. And, you know, if you decide to work with me, you know, on one-on-one with one-on-one lessons, these are all the things that I teach you. But you can see that was a good place to get out. We went down. That was actually the high of the day. And if you were trading today, as you know, we just went lower and lower and lower. Super, super vicious day. This is a little bit different view. We had that one rally and then just sold off and sold off and sold off. It has been tough trading out there, everyone. It has been tough trading to the long side. That is to the short side, been pretty easy. So, all right. So listen, this is what we're going to do now. We are going to do a quick poem by my friend Frank. You can follow him at Franco D over on Twitter. He was in my live stream when I had the live stream for several years. Great guy, great trader, and writes just such wonderful poems about trading, and I just wanted to share one with you. So today's market poem: it's the hand on the helm that steers the ship when markets get rough and stocks take a dip. Traders hang on as they tighten their grip. Even the best setups can stumble and slip. Isn't that good? Frank used to write one every single day for the podcast. And let's break this down. It's the hand on the helm that steers the ship. That's you. When market gets rough and stocks take a dip, which is happening now. Traders hang on as they tighten their grip. Even the best setups can stumble and slip. Isn't that wonderful? But he's right. You know, you are in charge of your ship. You can have the best setups in the world. Doesn't mean they're going to work for you. But that also means, even if it doesn't work for you, if you're using good back-tested, profitable approaches, when you have a good setup and it loses, don't be afraid to take it when it happens again. A lot of people don't want to take the second trade, the same kind of trade setup, especially on the same stock, because they feel like, oh, this one didn't work. It's usually the next one or the one that you don't take that is good. So anyway, thank you, Frank. Please follow Frank over at Franco D, and he posts poems every day. All right. So listen, before we start going down through my watch list, I do always like to take a little bit of time, talk about trader psychology. It is the most important skill that you will ever learn in trading, everyone. I can promise you that. I've been trading for over 25 years now. And whenever I run into problems, it's psychological problems. It's not my setups. It's not my chart knowledge or my chart acumen. It's the psychology that goes on in your head. And this is from my good friend Steve Burns. I'm sure all of you have heard of Steve Burns. It's someone that you should definitely follow. Follow him at Joseph Burns over on Twitter. He provides great content every day that helps all of us become better traders and investors. He is a mentor of mine, a friend of mine, coach of mine, and I can't think of one of better traders in the world than Steve Burns. And so when Steve Burns writes something about trader psychology, I listen, you should listen too, and let's see what he has to say. Most traders start to become profitable in the market when they have ceased to pose as its profits. Does that make sense? One of the worst things you can do, everyone, is to have an opinion on the market. We're human. We do have opinions, but acting on those opinions in the market, your opinions, not setups, but acting on those opinions, in my opinion, is one of the worst ways to lose money. At the end of the year, I was very bearish on the market, and it just kept going up, just kept going up, just kept going up. Well, I was right. I was just a little bit early, right? I was just a little bit early. Now we're going down, 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 down. I'm starting to turn bullish. I may be a little early as well. And, most traders start to become profitable in the market when they have ceased to pose as its profits. I always have to fight the tendency in me to forecast what's going on. The best way to trade, just like Steve says here in this in his post, quit trying to be a prophet about the market. Trade what's going on. Trade the price levels. Trade at the end of the day, like I do. They're the most important levels. But if you start to have theories about the markets and you start to prophesize about the markets, you may be right. But over the long run, you're probably not going to be right. You're going to have some good trades for sure. But in my opinion, the very best way to trade is just strictly price action. The price is the truth, not the narratives, not what you hear on the news or the financial networks about what some guy in a suit says is going to happen. Trade what is going on, not what you think is going to happen. And this saying, if you follow it, if you just you will become profitable in the markets if you trade price action and you quit trying to hypothesize and predict what's going to happen. So trade price action. It's the truth. Don't trade your predictions. So thank you, Steve Burns. Appreciate that, my friend. And again, please follow Steve Burns over on Twitter. Okie dokie. All right. So now let's go through my watch list. We're going to go through each stock one by one. We are going to take a look. And, whenever I'm looking to enter a new trade, I need three things. I have to consider three things. The first, I need a confluence or a combination of indicators lining up, ideally on multiple time frames. It's very important. Confluence, combination of indicators lining up on multiple time frames. Number two, I need to have a good risk to reward ratio. It's super important. The trades, the weekly trades that I showed you and the monthly trades that I showed you, you can see the risk to reward, the risk was very little. The potential reward was great, and that's why I had some good trades on that. So number one, confluence, combination of indicators lining up on multiple time frames. Number two, I need to have a good risk to reward ratio. And number three, I need to have a complete trading plan, regardless of the market that I'm trading, regardless of the time frame that I'm trading, regardless of the trading strategy that I am using. And for me, that includes the following. I need to know what my maximum allowed loss is. That's number one. Maximum dollar loss, like I just mentioned when we were talking, $100,000, 1%. That's my maximum allowed loss. Number two, I need to know what my emergency stop is. And I just covered that previously with 2 ATR. So number one, what is my maximum dollar loss on any trade? Number two, where is my emergency stop? Number three, where is my end of day stop or end of bar stop? Number four, where are my intraday profit targets or profit targets, partial profit targets above where I'm entering? Number five, I need to know where significant resistance levels are, like the 70 RSI. And then finally, I need to have a complete trailing stop methodology in place. So those are the criteria that those are what I use in any particular trade. And you just don't buy and sell. I need to know exactly if-then statements. If the stock does this, I'm going to do that. If it does that, I'm going to do this. And again, in the Udemy course that I have or in my private one-on-one lessons, I teach you all of these, but I need to have all of those. So confluence, combination of indicators, good risk to reward ratio, and I need to have a complete trading plan for any stock, any market, any time frame that I use. So, all right, let's go through the watch list. I'll mark the ones that are interesting to me, and I'll explain why. Here is Apple. Well, you can see Apple has just gone down. We had the move down. We had a little bit of a bounce, and now we're just continuing down. Earnings here on Apple on the 27th of this month, so that's coming up in about a week. We're at a 3530 RSI. I would be interested in buying Apple this coming week if we went under the 30 RSI and over the 30 RSI. Apple, of course, is a great company, one of the best in the world. I would love the opportunity to buy Apple with an under 30, over 30. And that's the most likely next trade. Of course, we could buy off the 200-day moving average. That's way down at 147. Let's hope it doesn't get there. But right now it's 35.30 on the RSI. One of my entry signals is an under 30, over 30. So I will mark Apple for next week. I'm not buying it here. I have to wait for rejection of the 30 RSI. That would be my entry signal. Let's take a look. Adobe. Adobe is at 30.25. It did not go under the 30 RSI. It did hold the 30 RSI today, which is good. So on Adobe next week, anytime next week, if it went under 30, over 30, that would be something I would be interested in Adobe. AGQ. Well, this has been a massive trade here. Congratulations to my friend Steve Burns, who I mentioned earlier. He took AGQ here on the 13th with the 520 crossover. That is a valid signal. And it roared like a monster. It went over, it got right near the 70 RSI and failed. He got out yesterday before today's decline, and that's what makes Steve such a great trader. So this 520 crossover that Steve took here looks like it was about 11.3% gain on that trade. Really nice trade, Steve. No potential new entries for this other than if we came back into the value zone, move sideways, look for a V1 or a V2, but nothing really in the near term that I see on AGQ. Amazon, my goodness Lord. Everybody, look at this. I mean, you would think this was like some little company or something, but we are at a 2117 RSI. I don't think Amazon has seen a 21 RSI in years, or maybe a couple years, maybe back during 2020, but I don't think it got that low. You know, something interesting on this chart that I want to show you is just a principle in trading. Sideways motion leads to trends. Trends will lead back to sideways motion, and then the sideways motion will lead to a trend again. Whether that's up or down, I don't know. When it's going to happen, I don't know. I just know that compression and sideways motion leads to trend moves. So for Amazon, it's at 2117. The only entry signal I would see on Amazon next week would be a close over the 30 RSI, but we're way far away from that, so I'm not going to mark that. ARC 2301. The 30 RSI did not hold. If I was going to be interested in ARC, it would be a close over the 30 RSI. We're so far away from the 30 that I'm not even going to put that as a potential. Boeing, well, we rejected the 200-day moving average here. We just came slicing down. We have lost the value zone. Earnings are coming up. That's probably going to move the stock around quite a bit, so I don't see anything that I'm interested in on Boeing. Alibaba, well, we have returned to the value zone. The value zone is anywhere between this green line and that green line, anywhere in here. I like to buy in value, sell above value, or buy below value, sell at value. Alibaba now, because we're in the value zone, would have to have a couple days of sideways motion. Look for a V1 or a V2. Earnings are coming up here on the 31st, so not going to mark this one. BTCO or BITO, Bitcoin, of course, if you've been trading Bitcoin, you know it has really, really gone down. It's at a 2880 RSI. If it closed back above the 30 RSI, I would be interested, so I will mark that one. Berkshire Hathaway had a huge move up here. My good friend Ava bought this. Look at this great risk to reward ratio here at the 200-day moving average. If it would have closed below, she would have got out. She had a great trade up, just a great example. Berkshire has come down with everything else here. Really nothing as far as next week that I would see as a potential. Budweiser, well, had a nice move up here. If it came back down, had a rejection of the 200-day moving average, that would be interesting to me. Although at that, we are right here, 1 ATR, 2 ATR. If it came to bounce at the 200-day moving average, I would consider it, so I'll mark that one. Beyond Meat, don't really see anything here. It's a 41.47 RSI. I'd need to wait for a crossover to get involved here or another under 30 over 30. Caterpillar, interesting on Caterpillar for next week. We're coming back. We've pulled back. If we pull back and have an intraday rejection of the 200-day moving average, I would consider that it's in the value zone, so I will mark that one. Cameco, we sliced through the 200-day moving average today. A rejection of the 250 would be an interesting place and give you a good risk to reward ratio on Cameco. So if we close under, close back over, or next week if we reject it and close over, that would give me a good risk to reward ratio. So I will watch for that on CCJ, Cameco. CCL, don't really see anything here. We have a 520 crossover. We'd have to pull back into the value zone, look for a higher low V1, V2, or have a 30 RSI. So I don't really see anything shaping up for next week for Carnival. Doordash, we're to 30.41. If we went under 30 and over 30, that would be of interest. So I'll mark that. The Dow, my gosh. We sliced right to through the 200-day moving average. We sliced right through the 250. If DIA closes back above the 250-day moving average, that would be a good risk to reward ratio. I would buy that. If it closed back under, I would get out. So let's mark DIA for potential next week. Walt Disney, my Lord. Look at this, everyone. My gosh, look at these gaps. Hopefully these gaps will get filled here. We're at a 23.49 RSI on a great company like Disney. This would have to close over the 30 RSI. We're so far deep, it would concern me to go from 23 up to 30. I'm not even going to mark this one. DocuSign, really nothing here. We have a double bottom with the bullish MACD divergence, but there's no signal, so I'm just going to skip over this one. Etsy at 1925 RSI. It's been a long time since I've seen these RSI readings. Look, when it lost the 200, boy, it lost it and it's just gone down. Such a low RSI, not even interested. Facebook. Well, look, on a company like Facebook, we're at 33.23 RSI. So if we went under 30 and back over 30, I would be interested in Facebook, although I do have to keep in mind earnings. So I will mark this one for next week for an under 30, over 30. FCX, have a nice uptrend. We've pulled back here. We have earnings coming up. I'm sure that's going to move the price around here. Probably not even going to do any, probably not going to mark this one. I really don't see anything in the near future. Fiverr, we're at $26.99. No, don't see anything there. Gold, if gold pulled back to the 200-day moving average, that would be a good entry point and a good risk to reward. So I will mark that. GNRC, 18.19 RSI, just horrible. Not going to be interested in that. Google, well, Google could have some potential next week a couple different ways. One, we could come down, we could reject the 250. I would be interested in buying that if it goes lower to the 250. If it closes back above the 200-day moving average, that is also a good back-tested approach. And or if we close back above the 30 RSI, that would also be an entry signal. So 3 potential entry signals for Google next week. One, if we go lower, rejection of the 250, if it holds the 250, and then that would be my end of bar stop. So that's to the downside. If we rally back up, get above the 200-day moving average, that would also be a legitimate signal using the 200 underneath me as my stop. And lastly, it's 28.08 RSI if it closed back above the 30 RSI. So I am definitely going to mark Google. There's a lot of potential there for Google next week. Goldman Sachs, well, it's 27.78. They had earnings, just came back down. If we close above the 30, I would be interested in buying a company like Goldman Sachs back over the 30. Home Depot, if we reject the 200-day moving average after this large move down, I would be interested in Home Depot, so I will mark that. IBB has just fallen off a cliff. It's 22.02 RSI, not interested there. INDA, this is the India Index Fund ETF. It closed below the 200-day moving average. I was watching that as a potential today. If we close back above the 200, that would be a potential. Intel, don't really see anything on Intel. It's a 45.15 RSI, so the RSI is holding up better than most stocks, but really don't see anything here, so I'll just move on from there. IWM, my goodness. Did not hold the 30 RSI. A lot of these 30 RSI deep dip buys are not working in this market. We're at a 24.27 RSI. Not even going to be interested in IWM. Johnson & Johnson. I was looking at Johnson & Johnson for a rejection of the 200-day moving average. Didn't happen here. Didn't happen here. We have earnings come up. So yeah, we may close above that on Monday potentially, but then we have earnings. So I'm going to skip over this one. Coffee, been in a nice uptrend here. In order for me to get interested, I would need, coffee is still above the value zone. I need it to come into the value zone, sideways motion, V1, V2, but I'm not going to mark that one. CarMax, 25.74, up today, interesting. So this is a green day. On CarMax, good relative strength, up 1.99%. Nice little V1 entry signal here, still under the 30 RSI. Don't think I'm going to mark this one, but I like the relative strength. Coca-Cola, been very strong. People flight to safety in these kind of stocks. For me to get interested in Coke, I needed to come into the value zone, which it has. I need to see it stop going down for a couple days, then look for a V1 or a V2. Don't know how that's going to play out. Nothing that I see really happening. So I'm not going to mark this one here. Lockheed Martin, defense stocks have been strong, as you can see indicated by this trend here. Pull back to the 200-day moving average. Still quite a long ways away, so I won't mark this one. Southwest Airlines, we were above the value zone, in the value zone. If we could stop going down, move sideways, look for a V1 or V2, that's something I would be interested in. Earnings coming up here. Who knows if that's going to happen, so I'm not going to mark that. Lyft is a 3286 RSI. Let me check here. By the way, I use Trade Navigator. That's my preferred trading platform. That's what you're looking at right here. Nice thing about this is I can measure where the RSI was at the low of the day. The low of the day was 3075. So I would need Lyft to go under 30, over 30. That's potential for next week. That's certain. I could certainly see that happening, so I will mark that. MasterCard, nope. Closed below the 200-day moving average. Really nothing there. If it closed back above, potentially we have earnings. Not going to mark it. McDonald's, 3638 RSI. This is a potential, but we have earnings coming up pretty soon as well, so I think I'll skip over that one. McDonald's, oh, sorry. Oh. Yeah. And under 30, over 30 on McDonald's would be really good, but like I said, earnings are coming up, so even if you got into it, I don't think you'd be able to hold it very long, so I'm going to skip. Merck, I already have Merck on the weekly. This is it on the daily. A close back, a rejection of the 200-day moving average would be interesting, but that's quite a long ways away, so I won't mark that one. Microsoft, I think Microsoft did go under 30 and over 30. If I measure again at the low there, yeah, 29.72. So actually, this would have been a legitimate entry on Microsoft today because it went under 30 and over 30. Although we do have earnings, so I'm going to skip over Microsoft. Don't want to hold through earnings. Netflix, well, everyone probably saw what happened to Netflix today, and this is the reason I don't hold through earnings. This is a good example of why I do not hold through earnings, everyone. You never know what the company's going to say. People that held through earnings woke up with a 21.79% loss on top of everything else Facebook has done. It's just gone down, 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 down. So not interested in Facebook. It's at a 1099. My goodness. So not interested there at all. Nike, 2477 RSI, close back above might be interesting, but a close back above the 30 RSI might be a little stretchy. It might be a little chasey. I'd prefer if it was like 29 and then it could just close back above, giving me a better risk to reward ratio, and it didn't have to move so far. So I will mark it just for something for us to follow for next week, but a close over the 30 RSI would be decent. Pfizer, don't see anything here whatsoever, not close to the 30 RSI. PKI, don't see anything there either. PLTR, 1988, my gosh. Would have to have a close over 30, but it's so low, a close back over 30 would be too stretched in my opinion, so nothing there. Philip Morris, been very, very strong. I mean, look at this, everyone. We're at 74.85. We're closing above the 70 RSI. Pull back to the 200-day moving average would be where I'd be looking, but that's so far away, I'm not going to mark that. PayPal, my gosh, 2912 RSI. So that's interesting. If we close back above the 30 RSI, it's not coming from too low of a level, so I will mark PayPal. The Qs, my gosh, look at this, everyone. This is unbelievable. Where would I get interested in the Qs? If we closed above the 30 RSI, if we closed above the 250-day moving average, or we closed above the 200-day moving average. So I will mark Qs. We don't have to worry about earnings with Qs. Rio Tinto had a huge move up here. Rejection of the 200-day might be interesting, but it's near the second ATR channel, so that's too high for me. All right, we're getting there, everyone. We are getting there. Shopify, 2069, down 13% today. That's unreal. Not interested in that at all. SIVB, oh my gosh, 2931 RSI, close over 30 would be legitimate, and we're close to that, so I will mark SIVB. SLV, nothing here. Snapchat, 20 RSI, way too low. Virgin Galactic, we're to 21 RSI, way too low. S&P 500, interesting. We have closed below the 200-day. It's the first time in many hundreds of days. So I am going to mark SPY for a couple of reasons, 3 reasons. One, if we closed above the 30 RSI, that would be a legitimate entry, especially on a large index like S&P. If we closed above the 200-day, that would also be legitimate. And my preference would be buying the S&P down here at the 250. So I'm definitely marking S&P either a rejection of the 250 if we go down, close back over the 200 if we go up, or a close back over the 30 RSI if we go up. Teladoc, 2980, close above the 30 might be interesting. We're close. Teradyne, 3644, really don't see anything there. Bonds, if we closed above the 200-day moving average, might be interesting. Tesla has just got shellacked here, down 5.26% today. I would buy Tesla down here at the 200 or an under 30 over 30, but earnings are coming up. That's probably going to interfere with the price, so I'll just skip that. Twitter, my Lord. It's shocking. It's seriously shocking looking at these charts. Down 6.6% in one day today on top of this huge move down. Yeah, it could close over the 30 RSI, but we're coming from 20 to 30. It's too far, so I'm not even going to mess with it. Unity Software, 2768, not too far down. Close over 30, I'd be interested in you, or a close back over the 200-day moving average. United Airlines Group, don't really see anything here. We're still quite a long ways from the 30 RSI. Natural gas. Well, we are in the value zone. We have had 1 day sideways motion. If I could get a couple more days sideways motion and then a V1, V2, that might be interesting. And again, I like to get outside of equities, gold, bond, silver, natural gas. So I will mark that one. United Healthcare. I don't see anything here. Oil has just been skyrocketing here, way too extended for me to get interested in gold, in oil. The dollar has rallied a bit here, but I don't see anything. The VIX, my gosh, look at the VIX. The VIX has rallied so far this month. My gosh, in the last 1, 2, 3, 4, 5, 6 days, up 9% just today. Not interested in VIX. Verizon, I don't see anything on Verizon. Walgreens, pull back to the 200-day moving average would make a lot of sense. We have the previous high that was resistance. Now that would act as support. So if Walgreens got down here into the 49 area, I would be interested. It's still quite a long ways away, so I won't mark that. Walmart, nope, don't see anything there. Energy Select had a pullback here. I did buy Energy Select back here with this rejection of the 200-day moving average, giving me a good risk to reward ratio. You have to be patient, and that did turn into a nice trade for me. I'm out of it now, but this looks a long ways away from the 200. Financials, this was a legitimate entry today, as a matter of fact. I didn't see this. We had a rejection of the 200-day moving average. I will mark that one in case on Monday we go under and back over. Real estate, my gosh, look at this. Real estate has just gone down, down, down. Rejection of the 200-day moving average would be interesting for me there, so I will mark that one. And then utilities, I don't, or utility sector, I don't see anything there. XLV, close back above the 200-day would be interesting if that happened next week. So I'll mark that one. Exxon, I already have on the monthly trade. Nothing here for a daily trade. And Zoom 2245. So let's quickly review the ones that I did mark. Apple, under 30, over 30. That would be my entry signal on Apple. Keep in mind, we do have earnings, though. I would take the trade up until earnings, but I would get out. But in the future, if it goes down and then eventually comes back over 30 on a company like Apple, that would be great. So an under 30, over 30 on Apple is what I'm looking for, but you have to keep in mind earnings. Adobe, very close. It's 30.25. It's one of the companies that did hold above 30. So an under 30, over 30 next week would be legitimate on Adobe. BITO, which is Bitcoin, 28.80. Close back over the 30 would be legitimate. Budweiser, if we had an intraday rejection of the 200 next week with a good risk to reward ratio, that would be my signal there. Caterpillar, same. Next week, if we reject the 200-day moving average, give me a good risk to reward ratio. That would be my entry signal there. Keep in mind there are earnings. Cameco, rejection of the 250 would be my signal for next week. Doordash, under 30, over 30 would be my signal. The Dow Jones Industrial, if it closes over the 250, that would be a good entry point. And or if it closes over the 30 RSI, and or if it closes over the 200-day moving average. Facebook is holding the 30 RSI, but if we went under 30, over 30, that would be my signal. Gold, if we had a pullback and rejection of the 200, that would be my signal for next week. Google, if we close above the 30 RSI, that's one entry signal. If we close above the 200-day moving average, that's another entry signal. If we go down further and reject the 250, that would be the third signal. Goldman Sachs, if we close over the 30 RSI, that would be my signal next week. Home Depot, rejection of the 200, that would be my signal next week. INDA, if we close back above the 200, that would be my signal next week. Lyft, if it goes under 30 and back over 30, that would be my signal for next week. Nike, closing over the 200 day, the 30 RSI. We're at 24. I'm going to take that one off. Please disregard on Nike. PayPal, if we closed over the 30 RSI, that would be my entry signal. The Qs, closing back above the 250. Closing back above the 30 RSI or closing back above the 200 would be my signal. SIVB, closing back over the 30 or closing back over the 250 or closing back over the 200. SPY, close back over the 200-day moving average, and ideally it close back over the 30 RSI, confluence of signals at the same time. That's definitely something I'll be interested in, or if it rejects the 250-day moving average. If it keeps going down, Teladoc, 2980, it's close to that 30 RSI, so that might be an interesting if it closes back over. TLT, if we close back over the 200. Unity Software, it's 2768 if it closes over the 30 RSI. UNG, if it closes over the 250 or closes over the 200, that would be the signal. XLF, that was a legitimate entry signal there today. You can see it respected the 200. So if I can get another, if next week, if it closes under, back over, that would be a signal. Or if it continues down, I would also play it off of the 250. Real estate getting very close to the 200 for next week. That would be a signal there. And then lastly, XLV if we close above the 200. So, there's a lot of good, high quality stocks that have just been beaten down. They're hanging around those 30 RSI levels and 200. So that is what these are the stocks that I will be looking at next week for entry. So Listen, before I let you go, just want to mention a couple things to you. So first, I do teach private one-on-one lessons in the evening time via Skype. I love to teach. I'm good at teaching. I've taught many students all around the world. They've turned into great traders. And I teach a one-on-one course. It's a 15-hour course, 5 sessions. Each session is 3 hours. That's where the 15 hours comes from. And I do it in the evening time via Skype. I teach you all the different trading approaches that I use. I teach you step by step. The course does cost $1,750, but I promise you it is worth every penny. You are going to learn a lot and you are going to become a better trader. We spend a lot of time together, and I teach you the lesson that I'm teaching you that night. I ask you a lot of questions. I throw trick questions in there. Just want to make sure you're understanding and everything. And then after we're done learning that particular lesson, then we do chart study where we go through the charts day by day. I put you in the driver's seat. You are the one that are going to be telling me, okay, here's our emergency stop, here's our end of day stop, here are our profit targets, here are our overhead resistance levels. And by the time you're done with this course, I promise you, you're going to be a better trader. So if you're interested, the first step would be to send me an email. The email is in the link of this video description, of this YouTube video's description. And I like to have a Skype call. The Skype call is free. It's not a sales call. I just want to learn more about you, your trading challenges, your goals, and then it's a good time for you to ask me any questions about the course in particular. And when we're done with the Skype call, you think about it as long as you want. And if you decide one day, hey, today's the day I want to start becoming a better trader, I'm going to email Greg, and then we'll get it scheduled and we'll get going and we'll start learning together. So, consider that it's an investment in you and your trading. Secondly, I mentioned a little earlier, I have a great online video course available at udemy.com. It's called the Deep Dip by Stock Trading Strategy. Interestingly enough, the market environment that we're in right now is perfect for the deep dip buy strategy. The link to the Udemy course is in the description of this video. It only costs between $12, $15. It's a great price, but don't let the low price fool you. There's such great content. There's 26 videos. There's 9.5 hours of total content. There are 15 study guides. I've got so many good reviews from around the world, from students, good reviews, great feedback. It's a great course. So if you're starting to trade, the one-on-one course obviously would be the best, but it's more expensive. But if you're just starting to trade and maybe don't have the capital for that, start with the online course. It's really going to help you. And then lastly, if you like this podcast, I would appreciate it if you could hit the thumbs up button. It helps build the channel, helps keep the channel around. And I got to tell you, I hope that these weekend update editions are helping. I do miss the live streams. I miss the interaction with people. And I did that for 3 years, but I did take a trading position that does not allow me to do the podcast. So anyway, I hope you like this. I hope you have a good week. I hope you didn't get too beat up last week. And I hope that these flag signals here today that we went over will give you something to look at and good risk to reward ratios. So I hope you have a good weekend. Be good, be safe. We'll come back next week. We'll see what this crazy market is going to do. But an old saying, we don't know what the market's going to do, but we have to know what we're going to do, right? And that means where our stops are, where our profit targets are we position sizing for volatility? Are we doing everything we're supposed to do? And listen, if you've had a bad week, don't try to make it all up in one day. It never works. Take the long view, one trade. Each trade is just one of the next 1,000 trades, win or lose. Take the long view on trading. So, all right. Well, I think that's it. Hope this is helpful. And I will, God willing, I will put out a podcast next week. And it really should be interesting to see where the market is next weekend when I do this. So, all right. Take care, everyone. On the way out, I have to run the U.S. legal disclaimer. Thanks a lot for visiting. Appreciate it. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity.